A very good morning to you and welcome to the Business Lens on Rapid Television Abuja. And it is great to have you with us on this edition where we are going to explore these numbers and how they actually affect you and your businesses. Now, so let's begin with the key business trends that matter right now, starting from the headlines. The country's foreign reserves have climbed above $47 billion for the first time in nearly 8 years, hitting $47.025 billion, which is the highest level since August 2018. This is good, right? Signaling renewed strength in the external sector and boosting confidence in the central bank's medium-term outlook as the upward momentum seen late last year continues into 2026. Now, here's a major pressure point for state finances, right? Taking us to the next story where Nigerian states paid a combined 455.38 billion naira in foreign debt service in 2025. This is up sharply from 362.08 billion naira in 2024. This is about 27.77% increase as more statutory allocations were deducted at source under FAC to meet external loan obligations, which are treated as first-line charges. And to the next story where the management, that's the National Identity Management Commission, says it will begin nationwide ward-level enrollment for the National Identification Number, NIN, from February 16, 2026, following a presidential directive to take NIN registration directly to the grassroots across the country. And now to the pension space, where Nigeria's National Pension Commission has raised the allowable investment limits for ordinary shares across key retirement savings account fund categories, announcing the adjustment in an addendum released on February 9, 2026 as part of efforts to improve asset allocation efficiency amid a shortage of qualifying alternative investment assets. And now let's go to Zambia, where Zambia's central bank has cut its benchmark interest rate for the second consecutive meeting, bringing it down from 14.25% to 13.5%, as policymakers express growing confidence that inflation is easing faster than expected, supported by currency stability and improving macroeconomic conditions. Now let's move to the next story where it definitely touches someone who is in one of the booker shops down the street somewhere in the remote area, where NAFDAC has hit back at a recent media claims that the federal government ordered a halt to the sachet alcohol ban, saying, those reports are false, and the prohibition on alcoholic beverages in sachets and PET bottles that are below 200 ml, that's 200 ml, remains in force, even as the agency begins evacuations of non-compliant products, a move that they said puts it at the center of a fierce debate over public health and economic impact, after lawmakers also ordered full enforcement, and industry groups also came out to warn that the policy threatens nearly 1.9 trillion naira in investments. And in a significant move for the FX market, the Central Bank of Nigeria has approved licensed bureau de change operators, the BDCs, to participate directly in the Nigerian foreign exchange market, allowing each BDC to purchase up to $150,000 weekly in a bid to boost retail dollar liquidity and narrow the widening gap, which is now over 90 naira between the official and parallel markets rates. And then let's move to the stock market, where Nigeria stays firmly in the green today as the NGX All Share Index gained 1.65% to close at 176,809 points, pushing the market capitalization to about 113.5 trillion naira on a turnover of 50.43 billion naira, with 66 stocks rising against 22 losers, while optimism in global markets continues to support investor sentiment here at home. My name is Divine Alex. We'll be looking at the stories and more after the break. Stay with us. You are welcome back. This is still the Business Lens on Rapid Television Abuja, and my name is Divine Alex. Now, I have a business consultant and a financial expert, Benjamin Awooks. Yes, I know I've been murdering the name all this while. Pardon me. You're welcome to the show, Benjamin.
you for having me. Thanks for having me.
Okay, good morning. Now let's get into it proper, starting from Nigeria's external reserve story that have now climbed to above $47 billion for the first time in nearly 8 years, hitting $47.025 billion, which is the highest since August 2018. This is great, right? I know a lot of people are now trying to wonder why we are even mentioning plenty numbers, and this is why this matters to you, because with these numbers, right, because stronger reserves can help stabilize the naira, lower import costs, and boost confidence
Exactly.
in the economy. Now, over to you, Ben. With these reserves that is now above $47 billion, like I said earlier, how will this affect currency stability and prices for goods Nigerians buy every day?
Yeah, that's a good question. Like you said, uh, your foreign reserves gives you a buffer to be able to, defend the certain imbalances within the economy. In terms of foreign exchange, a high foreign, a high reserve would help the CBN, would give the CBN the ability to how do I put this now? I don't want to say defend the naira.
Okay.
That's a political term. Because
Yes.
they are technically not defending it, but they are carrying out what we call a managed floats. So they are going to manage the floats. They are going to manage the floats in a way that the black market does not have an undue influence with the naira. This is an election. This is an election period. So having a big buffer like this will give the CBN the ability to ensure that the naira remains stable. Without spending too much. So that's it for exchange rates.
Okay.
And you know how the cascading effect exchange rates have on prices, because a good section of our inflation numbers are
Okay.
imported inflation. So if our exchange rate remains, stable, trending downward, and the cost of the prices of imports would then also trend downwards.
Okay.
So yeah, that's my take on that.
All right. So we are definitely going to go into some of those things just much later. But right now, do you think that this whole reserve issue signals that the central bank is on track to actually meet the 2026 targets that they set for themselves? And what could this mean for inflation and also the consumer spending?
They are definitely on track. Last year they grew it by about 5.5 billion. And look at the
Ben, are you still with us? Ben, are you still with us? Okay, I cannot hear him proper. And I think his network is having issues. And then we'll just have to give him a moment to reconnect back while we discuss on the issue of reserves. Okay, I think he's back right now. Ben, can you hear me?
can you hear? I can hear you. I can hear
Okay,
you.
go
Can you hear
ahead.
me now?
All right, go ahead.
All right. So as I was saying, you know, they grew the foreign reserves last year. They hit their target last year. They grew it by about 5.5 billion.
Okay.
This year already in just about 8 weeks, about 6 to 8 weeks, they've already grown it by almost 2 billion. So the target for 2026 is I think 50 billion. Yes, the target is 50 billion. So
Oh,
looking at the growth rate already so far, they are heading towards
we're
that
looking
direction.
like
They are
we are
on the right
close to
path.
it. Okay. So, but
Yes.
you did explain how this affects inflation and consumer spending. Because no matter how much you talk about the numbers, we still need to let people understand why these things really affect them. And when we talk about inflation and consumer spending, it touches everybody because once inflation is up, it affects the prices of things, and people might not be able to, have access to some necessities because of the cost of things in the market. So if we now have this situation and then it's looking like CBN is now going closer to the target for 2026, how do you think this is going to affect inflation and consumer spending this year?
It will definitely have a positive effect, and I'll tell you why.
Okay.
Like I explained, your reserves are a big buffer. So when the CBN has the buffer to ensure that the naira is stable and the naira trends downwards, that would also affect inflation because, like I said, a good percentage of our inflation is imported because we import a lot. So
Okay.
that would help inflation to cool. So a rising external reserve is an indication that your Fed or your central bank in this case is in a stronger position to ensure that inflation does not trend upwards. So that's basically what it
What
means.
it
So
means.
obviously the execution matters. Execution matters. But I think using last year and second part of 2024 as a sample size, the CBN has shown us that they know what they're doing. They've
Okay.
shown us that they know what they're doing.
Okay, they've shown us that they know what they are doing. And while the nation sees stronger reserves, states are still grappling with rising foreign debt obligation. I think it's important to note that states paid a combined 455.38 billion naira as foreign debt service in 2025. This is way up, the 25.77%, which is the fact that in 2024, the amount was 362.08 billion naira. And this is according to the data from the Federal Accounts Allocation Committee, that's FAC. Now, interestingly, this is not just numbers, as this is critical for Nigerians because higher debt payments mean that there's definitely going to be less money for roads, less money for schools and hospitals in your states, right? Because I'm talking to you. Now, to you, Ben, how do you think this 25% jump in debt servicing is definitely going to put pressure on state budgets and public services?
Yeah, I don't think it will put that much of a pressure on the states.
Okay, can you explain?
They generally deduct it from fact directly. If you also look at the numbers, sometimes when we look at numbers, we have to contextualize them. If you also look at the numbers of the revenue that states have been getting from FAC, if you look at it on a year-on-year basis and put that side by side with the year-on-year basis of debt, year-on-year numbers for debt servicing, you will see that on a percentage basis, the increase in revenue has outpaced the increase in debt servicing. So states still have a larger purse to carry out their their fundamental duties to their constituency.
Okay, so you're saying that because they still have a lot, reserved, right? So giving this debt service,
No,
which is a
no,
first
basically,
line.
what I'm saying is that sorry to cut you.
Okay, go
Basically, what
ahead.
I'm saying is that the rate at which their revenue has grown over the
Okay,
same period
okay.
is higher than the rate at which their debt servicing has grown. So yes, I do acknowledge the increase in debt servicing, but I also want us to remember that the increase in revenue has outpaced the increase in debt servicing.
Okay.
So if you look at it that way, they're still at a better position
Oh,
compared to last year.
compared to last year. I like that you said that they're still at a better position. But you know that when you go to some states, we see some roads, there's infrastructure, things that are supposed to work on. And then you hear things like, oh, it's a federal government road, it's a federal road, and they're not supposed to be able to do these things. How do you think, because if they keep getting more revenue, that means that they can actually step in some of these projects, maybe later, remit to the federal government to reimburse back. Situations like that do happen on a normal setting. Now, how can states balance paying debt? Because if the debts keep going up and then they're putting plenty into there, that means that there will be limited projects that they can take on without having to wait entirely for the federal government, especially when it's the federal government that is supposed to, attend to some of those ones. How do you think that they're going to be able to balance paying debts while funding essential services?
First of all, I don't think that the state government should concern itself with growth or projects that are earmarked for the federal government. I don't think they should do that.
Okay.
If they want to, there are ways they can do it without necessarily exposing themselves. The
Okay.
states do have a lot of roads to build. They
Which
don't
is
have to
true.
they don't have to start looking at the federal government roads. They do have a lot of roads to build. They do have a lot of things to do. So if they focus on what is apportioned to them and they ensure that they're using that money effectively, the people should see the people should see the difference. The main point here why there's a lot of pressure and why personally I'm putting pressure on the states is because we have seen a significant increase in revenue since the FX regulation time. The increase in revenue from FAC to states has massively increased.
Okay.
So that is why the states should be held to a higher standard, definitely.
Okay.
That is still my position. A 27% increase in debt servicing is not an excuse
It's not an
for
excuse
the states to
for
say it's
for
not an
them not to
excuse.
do the necessary things. And speaking of
Yeah.
essential services, right, the government is now bringing NIN registration closer to the people. This is something that many people are really going to love, because I remember that there was a situation one time, someone close to me, I think it was my neighbor's sibling, was actually struggling to get to a particular location for NIN registration somewhere in a remote area. I think it was in the village, something like that. Now, the National Identity Management Commission will start nationwide ward level enrollment for the National Identification Number, that's the NIN, on February 16, which is on Monday, 2026. Now, this is really important, like I said. Ordinary Nigerians, because it makes NIN registration easier when this thing is closer to us, right? Which is needed for a lot
Mhm.
of stuff. We talk about our SIM cards, we talk about our banking, we talk about a lot of other services that requires NIN. Now, how will ward level registration improve access for people living in remote or rural communities?
Yeah, thank you for that question. This is a good step by the federal government. We have a data problem in this country. I think this project is funded by the World Bank partly,
Okay.
and but the World Bank has the mandate, but it's funded by the EIB and the AFD. So basically, Europeans are funding it, facilitated by the World Bank. That's because they've identified that Nigeria has a data problem. Nigeria does not have enough data on its citizens. And I think this is the right step that the federal government has taken to take it to the grassroots level. Recently we saw the rise of agency banking. We have POSs now with 770, about 99.9% of the local governments have at least one or two POSs there. So that should tell you that if agency banking can reach everywhere, then the federal government has no excuse but to take NIN registration, to the grassroots level so that they can meet up their targets. They were given a target for about 160 million Nigerians as at 2024 or 20 about as at 2024, the target was about 160, 150. They failed to meet that target. I think they got to about 120.
Okay.
Right now we have about approximately 230 million Nigerians. So they should be able to get all 230 million Nigerians,
Okay.
in the next 1 or 2 years.
Okay. Now let's talk about the challenges, because the numbers are big, right? What do you think the challenges are going to be like? Especially, are there challenges like staffing or infrastructure that could actually slow down this nationwide rollout? Because we have to talk about these things, right? So what do you make of the challenges that could maybe stop this, or at least help people to be able to access their needs as easily as possible?
Um, the biggest challenge to me would be areas where we have security issues.
Okay.
There's certain local governments of this country, there Nigeria. There's certain local governments that the federal government does not exactly have a grip on. So those are the areas that will be challenged, that will pose serious challenges for me. We've
Okay.
established that funding is not a problem because they've been given the mandates from international bodies that will provide funding. So another challenge I think I can identify would be internet penetration. That would be another
Okay.
challenge. That would be another challenge. I don't think staffing should be a problem. If you have funds, you should be able to
To
find
find
the right
it.
people to do
Okay.
this job. It's just the internet penetration problem and the security issues. These are the two
Security.
challenges.
Okay, thank you so much for that. And while access to identity improves, right? Because of this whole name to the grassroots, that's door to door. Nigeria's retirement savings are also seeing changes. This is taking us to Nigeria's National Pension Commission that has raised the allowable investment limits for ordinary shares across key retirement savings account fund categories. These affect Nigerians. Yes, it does. Because it could boost,
Yeah.
Your RSA returns, giving your pension more growth over time. And many people don't even understand this whole pension thing, and I think they should really key into it. But now let me ask this, right? What do you think this higher limit on ordinary shares mean for RSA fund growth and for maybe your future retirement? Let's use you for example right now. Go ahead.
Well, yeah, thank you for that question. Very
Okay.
interesting one. Definitely. What we saw in terms of Fund 1, Fund 2, Fund 3, and Fund 4 for pension funds, they increased the limit. It was a cap on how much of those funds can be channeled towards equities.
Okay.
That stocks. Those are the lower equities are. So it was generally we saw like a 5 to 7 basis points increase. 500 to 700 basis points. That's 5%. We saw an increase across Fund 1 to Fund 4. So the PFAs can now invest in equities more. It's a good one. It means that they're taking a little bit more risk for higher returns, and it also means that the pensions, your pensions now as an average Nigerian, or my pensions in this case, could grow faster, and they'll be bigger, But let's not forget about risk too. On this topic, I actually
Yes, the bigger the risks,
prefer infrastructure.
the bigger the money, the bigger the risks, right?
Yeah, the bigger the return, the bigger the risk. So I lean towards infrastructure. I know
Okay.
they also increased that. I lean towards infrastructure. I lean towards private equity. I lean towards areas compared to public equities and stocks.
Okay.
Because I even prefer corporate bonds. They should go to FMTQ and do some deals around the ventures, the companies.
Okay.
I feel like those are better deals. Sorry to my NGX people, but nah, man. We don't need pensions going too much into. We don't need pensions going too
How
much
can you
into
how can
equities.
you
We don't
say
need that.
that when a lot of people are relying on their pension and you're telling them that, oh, we don't need it to grow anyway? I get your point, but we have someone else
But
on the call, and I would also like to get his 2 cents on this whole pension conversation. It is Mr. Abiola, economist Abiola Adekunle from Keto Markets. You are welcome to the show, economist Abiola. Good morning.
Divine, good to be here.
Okay, thank you so much. So we were talking about pensions, right? But I want to ask, because of the whole increment of the investment stuff, now with fewer qualifying alternative asset that is now available, how do you think this adjustment help pension managers diversify and protect your money? That's if you are also one of the people that, went into pension, personal pension or pension stuff. Yes.
Okay, well, I didn't get the actual news. I'm just coming in.
Okay.
But from what you're saying, I think I did pension once. There was a company I worked with in 2009 to 12.
Okay.
I think that was the last for me, for personal reasons.
Last.
But
Okay.
yeah, because I feel generally on this pension issue, if you allow me to digress a little.
Okay.
It is structured in such a way that you cannot get the full value of whatever you have paid. First of all, if you are unemployed for some reasons and you need to access your pension, you cannot get more than 25% before you are 50 years.
Oh.
So that means that pressing the issue is that remaining 75, you cannot access it until you are 50. That is one. Two, once you are 50 and you start getting your pension, most of the time you have people dying off and leaving a whole lot of pensions behind. So I have my own personal choice, but I can't say that on air because this is not the discussion. But at the end of the day, for whatever pension and pencon are trying to do, I think they should look at other areas in which they can actually push investments. And this is not really Nigeria. It can be anywhere in the world where we can push investments that are kind of safe because the pension has to be very safe. And something that can give people a better return, because when you see the contributive pension and you see what entrepreneurs receive, with the reality of today, you cannot survive on it.
Okay.
An average person cannot survive on it. So somebody is collecting a pension of 50,000 naira per month, 60,000 naira per month. I know somebody that is related to me that is collecting 28,000 naira per month. And you can debate that, oh, but this is what they contributed and all that. But it is not their fault that the naira has been devalued so much. It is also not their fault that their pension fund has not grown as much as it should. So at the end of the day, I think there is a whole lot of work on the PENCOM side or the pension administrator side to make sure that these senior citizens of Nigeria, at the end of the day, after laboring for the country for a whole number of decades, should at least be able to enjoy the rest of their life, at a minimal level, till God sends them home.
Okay, so now I think this is one of the reasons why this development is actually a good news, right? Now, Nigeria's National Pension Commission has raised the allowable investment limits for ordinary shares across key retirement savings account fund categories. That was what we were discussing. Now, there's also something new, right? There's also something new. Now, with this new investment limits and the drive to expand pension assets across Nigeria, there's an important development in how informal sector workers can also enter the pension system. Now, at a recent event in Abuja, the National Pension Commission licensed Awaba, which is our money, as Nigeria's first accredited pension agent under the rebranded Personal Pension Plan, which is a major step toward pension inclusion for millions of traders, artisans, freelancers, and other self-employed Nigerians where pension coverage has traditionally been as low as about 0.25%. Now, I remember having a conversation and then they said, oh, you can access more than that 25% that you talked about. Till after 50, you can now have access to some of the other funds. Now, but to show what this means on the ground, here's my full report from the event. So let's, watch this report, and when we come back, we'll have a little bit banter before we go on a quick break. Stay with us. Now fully licensed by PENCOM, Awaba is authorized to onboard self-employed Nigerians, including artisans, traders, transport workers, private security personnel, and other informal workers into the micro-pension scheme, a sector long identified as Nigeria's biggest pension coverage gap. The initiative, branded as the Resilience Mandate, seeks to take pensions directly to the streets, simplifying access, reducing bureaucratic barriers, and promoting long-term financial security across all income levels.
We have proven that for as little as 3,000 naira a month, we can provide personal pensions bundled with health insurance. It's a nationwide rollout of an accredited agent network designed to formalize our workforce.
Beyond policy alignment, Awaba is focused on scale. During an interview with Rapid TV, Awaba CEO, Chief Executive Officer, CEO, Tunji Andrews, revealed plans to onboard 5 million Nigerians through the newly launched Awaba Agent app, which enables seamless pension enrollment and contributions from any location.
That we're now trying to ensure that customers across the country can go to a POS terminal and onboard to personal pensions.
The platform allows users to open personal pension accounts, make flexible contributions, assess permitted withdrawals, and create tax-free pension-linked savings accounts for children, helping families build intergenerational wealth. Speaking at the event, PENCOM Director General Omolola Oloworaran described Awaba as a critical reform tool that addresses what she called national vulnerability, the lack of structured retirement planning for millions of Nigerians. She noted that personal pensions now align with the federal government's broader economic reform agenda.
You can be looking at returns of upwards of 25%. That's if you look at what PFAs are returning and and the taxes you're saving. So I think it's a no-brainer. I think all Nigerians should key into the pension message and begin to, plan for their future.
The launch also featured fireside chats, panel discussions, and cultural performances with conversations centered on from policy to people, policy pathways for inclusive pensions, and personal pensions as a tool for economic resilience. One of the panel moderators, Ugochukwu Obichukwu Ugodri of Nairametrics, shared his perspective of the initiative.
All around, it's just an amazing initiative, and micro pensions, which I think they call now personal pension, is a very important aspect of capital formation in any economy.
Participants at the event also welcomed the initiative.
So today's event is a remarkable one because we're seeing the launch of the very first pension agents.
Pensions people, not just only pensions, personal health plans, and all the other ancillary benefits that comes with the resilience mandate that our BA is trying to push.
We need to democratize pension. If you have a situation where only less than 10% of the Nigerian adult population has a pension, that should be worrying.
The unveiling of the Awaba Agent Network signals a new direction for Nigeria's pension system, one that prioritizes individuals over institutions and brings retirement planning closer to everyday Nigerians. From Abuja. Mr. Biola and Ben, I'm sure that you saw this, and which means that there's new developments, and probably this is something that a lot of Nigerians should actually key into. But I would like to get your thoughts, Economist Abiola.
A fantastic idea, because it brings in a whole lot of flexibility, which is one of the things that I love when it has to do with bringing in maybe, even though the others are private, but you understand what I mean, this kind of entry level. I also feel that the inclusivity would go wide, but more people will join when more people are assured that this is for real. You know, a whole lot of things can come on board, you bring in a new product, but people would start, matching more into that product when they see that, oh, this thing is actually, because some people will never be until they are sure that it's stable. I remember when a particular microfinance that is very popular in Nigeria now came on board, a lot of people refused to do business there. A lot of people say, no, I cannot put my money there, or I'll keep my money in my normal conventional bank. Some even said, we don't know if they will crash tomorrow. So this is a good, beginning, and I hope that they prove themselves and actually become a cornerstone in the pension scheme sector, because people actually need flexibility. But I have a couple of questions. I'm going to go through their whole package and see personally what it is all about. Yeah, because I want to know, what if somebody stops paying? What if somebody skips a month? There are some fine lines I need to read about. Who is regulating them? What are the extents? Where are they investing these monies? How? Because we need to be sure that decisions are not being made by one or two persons over 5 million people's funds. So I'll go into it and research about them. Maybe one of these days we'll still talk about it again.
Okay, no problem. Thank you so much, Economist Abiola, for that contribution. Let's go on this quick break. When we come back, we'll head to the NAFDAC that has denied reports that the federal government directed it to suspend the ban on sachet alcohol, that's sachet drinks and small PET bottles below 200 ml. So do not touch that dial. Make sure not to go anywhere. We'll be right back. You are welcome back. This is still the Business Lens from Rapid Television, Abuja. My name is Divine Alex. Now, NAFDAC has denied reports that the federal government directed it to suspend the ban on sachet drinks and small PET bottles that are below 200 ml. And I know that this is going to touch a lot of people. Remember that there has been back and forth with some people coming out to say, oh, this is going to hurt investment because we actually invested money to get the materials to produce these things. And then on the other hand, they're saying, no, this is not really good. That's for people, pushing the environmental aspect of it, is saying that a lot of this is constituting a lot of waste that they don't even know how to manage. And plenty of stories have been going back and forth on this whole sachet drinks and those small PET bottles. Now, let's head straight into the stock market updates for today. The Nigerian equities market stayed firmly in the green yesterday as the NGX All-Share Index climbed another 1.65% to close at 176,000. 809.42 points, lifting market capitalization to about 113.5 trillion naira on a turnover of roughly 50.43 billion naira, signaling continued broad-based investor appetite. On the other hand, the breadth remains strong, with 66 gainers outpacing 22 losers, led by top performers posting full limit gains, including tech and growth names, reflecting sustained optimism that is across sectors and solidified bullish sentiment. Now, we also have the global markets that are also buzzing today, with Asian equities hitting record highs on strong momentum and robust jobs data that is out of the U.S., boosting cross-asset confidence, a positive backdrop for emerging markets like Nigeria, for example. So to you, Economist Abiola, what do you think of this, developments?
Which of them? The stock markets
The
or
stock market updates, yes.
the alcohol?
I know that you are going to hint that, this is going to, like I said, it is touching almost everybody. And I know a lot of people are willing to fight, but at the end of the day, we have to look ahead to see what works for us, right? But no, let's not talk about the sachet drinks.
The sachet drinks has, funny enough, been around way longer than other things that are becoming sachets now. Sachet naturally is a reflection of the economy of a particular country. If people cannot really afford, to buy in bigger quantities, that is when you see that we'll start having smaller quantities, sacheting everything. At least I've seen all manner of sachets, last year, this year. Milk has always been a sachet for some time. But when we were growing up, there was nothing like sachet milk. It was always tin milk.
Tins, yes.
But as far as I can remember, even while I was in Lagos in 2003, 2002, I remember that all those drinks were always in sachets. The reason was not because of affordability at that time, partly because of it, but it was because of accessibility. For example, a conductor on the road in Oshodi does not have the time to go and buy a bottle of drink, open it and start drinking it while he's doing his conducting work. So they just buy the sachet, put it in their mouth, and they're off. But now it has become a case of people cannot really afford the bigger quantity, so they want to buy the smaller doses.
The smaller ones.
So if we are now talking about the fact that, they are causing a menace, it's an environmental issue, they are blocking drainages and soakaways and all that, then it should not be only on the pet drinks and the alcohol side. It should also be across everything that is in sachet. So if that is the case, then maybe they have a point. But if that is not, then I think somehow we're just targeting this particular area. And I feel that for now we should actually not focus too much on the drinks themselves or the other sachet products. Let's focus on proper waste disposals and teaching people what exactly to do. Because when you ban this one, for example, and you stop it, some people will still eat, put it in nylon, wind down their glass, and throw it on the road. So the habit, much more than the product, is what we should be looking at. Concerning the stock market,
it's a good
it's a good one that we are on the bullish trend, and we're looking at how long it would last. Normally, when the year starts this way, first quarter, second quarter, there's usually a lot of pumping. Whether you accept or you don't accept, people are in the market for different reasons. Some are there to pump up the value, take their profit, and take off. Some are actually looking at the value of the companies and investing in these companies. So I expect this bullish movement. Of course, we see a couple of bearish here and there, but I expect this bullish movement to move and continue to even the second quarter, So this will also attract much more investors, that are pumping more money. So we are even most likely might see something far, far better in terms of absolute growth this year compared to last year. And mind you, last year was very good.
Last year was very good. Okay, thank you so much, Economist Abiola. Ben Awogs, are you still with us? Benjamin, are you still here? Okay, I do not think that he's still with us, but I wanted to get his last cent. Okay, I think he's here. Benjamin, your last cent, especially on the stock market updates for today.
It's always good to see a bullish run.
Okay.
I think companies release their statements. I think a week ago, a lot of statements have been coming in that we're still expecting some, and obviously the notorious ones were doing very well. The statements were good, and usually this period is usually a very high market activity period for the agents, and it's very good. It's very good to see that high market activity is going in the upward direction.
Okay.
That could attract more people to list. And let's not forget with this, the sentiment around the markets overall this year is very positive because a lot of investors are expecting the giant behemoth called Dangote Refinery to list. So there's a lot to look at. The investors are really waiting, and the sentiment is very positive. So it's a good one.
It's a good
one, and
one.
it's also an indication that the economy is doing well.
Okay, thank you so much, Ben, for joining the conversation today. And that is all for today's edition of Business Lens, where we've explored Nigeria's economy, markets, and opportunities for businesses. Don't forget to follow us across our digital platforms for more updates. My name remains Divine Alex. Thank you for watching. See you next time, 11 a.m. on Monday. And don't forget to stay with Rapid TV. Bye for now.